The Nifty Metal Index is up 14% over the last month compared with a 5.7% gain in the Nifty 50 index. Surprising considering that the September quarter earnings of metal companies were down sharply on a year-on-year basis. So what explains the renewed interest in metal stocks, and can this trend sustain? Let's find out. The key trigger appears to be reports of China planning to relax some of its COVID restrictions. Now, according to reports, China has scrapped the system penalizing airlines for carrying COVID-positive passengers beyond a certain limit. It has also eased some quarantine rules. Now, most base metal prices have risen following this development. Besides, there are also reports that the government is planning to extend the deadline for lenders to cap the ratio of loans to the property sector, and this is expected to provide further relief to property developers and help the construction sector. Now, why is China so important when it comes to metals and other commodities? Given its size, China is a big buyer of metals in global markets. The assumption is that the easing of COVID restrictions will lead to a revival in industrial activity, thereby increasing demand for metals. Remember, for the most part of 2021, demand from China was driving metal prices higher. However, China's COVID-0 policy has led to a sharp drop in demand for metals. Besides a drop in demand, metal companies were also hit hard by costly raw materials, fuel and power expenses. Tata Steel's net profit fell 90%. JSW Steel, SAIL, these companies reported losses, and Hindalco's standalone net profit dropped 66%. Furthermore, to contain domestic inflation, the government imposed tax restrictions on exports of some steel and iron products. Now, this made Indian steel exports unviable and increased the supply of steel in the domestic market, causing steel prices to drop. And what does the international scenario look like? With the US and Euro economies on the cusp of recession, international demand for steel is likely to be muted. Besides, when China reopens, it will start exporting steel and aluminum, which could depress the prices. But there are other factors at play as well. The US is also reportedly looking to ban imports of Russian aluminum. Remember, the US currently imports 10% of its aluminum from Russia, and the ban means that it has to look for other sources in the global market. And this news has sent aluminum prices soaring on the London Metal Exchange. And now on to the big question: can the current rally in metal stocks sustain? Investors in India are betting that the worst in terms of margin pressure may be over for metal companies. Prices of coking coal, which is a key raw material, have begun to soften. That said, better profit margins can only help to a certain point. Demand needs to be strong as well. Commentary from steel companies after Q2 earnings suggests that demand as well as realizations are now stable. Analysts feel revenues may not touch 2021 levels anytime soon, but the numbers may not go as low as they were during Q1 as well. Alright, I hope this helps. For more such videos and explainers, keep following us on Moneycontrol, and don't forget to share, subscribe and like this video.